Hi, this is Shane with the Rational Trader. It's Tuesday, February 12th, and my result for the day was plus 5 ticks in gold and minus 9 in oil for a total of minus 40 today. Let's see now. There's a bunch to go over here now. So nothing in the yen. That's here. And then nothing in the U.S. session for the euro. Look at that. Looks like there was a nice move there. Okay, so we had... All I'm interested in is seeing that. I was looking in the right spot. Right? And as it happens, I didn't get a signal, but this is the correct thing to be doing. All right. We also have the overnight session for the yen. I'm sorry, for the euro. So let's take a look at that. That was minus 7 ticks. This is in SIM. So that wanted to, let's see. So that's going to go from the London Open here on the left, where there's a nice fall. Again, same thing. I just kind of want to see that orange bars at the beginning of that move. That's what I'm after. We're looking in the right spot. I didn't get a signal, but I will eventually. And right there as well. Excuse me, I'm sorry. I'm still not feeling well. If I was trading that 298 cut, I'd be pretty happy. So that's, again, we're looking in the right spot. It looks like I shorted it here, and the market's still not done going up yet. And then we stop here at this green line at the Euro Open, and the other chart takes over for the U.S. cash session. So we're using a different model here. Okay, so there's that. What is the risk factor? So it's a 5% risk factor, which is very low. Average of 1.2 trades a day. So not unusual to just get the one trade off or just none at that low. A risk factor. In gold, let's see. Okay, let's look at the NASDAQ here. There's too many to look at now. The NASDAQ, 4.25 points. This is also in SIM still. And I'm not even sure if this is going to work because I think I'm still concerned that this market's too volatile. So let's see. You gotta like that. Just again, that's looking in the right spot. There's a 141. Nice break long right there. Wow. Ugly thrash, stay out of trouble. And then more thrashiness. And then a beautiful move right there. So again, we got a shot at it there. Tried to get long there on the pullback. That's a very reasonable looking trade. Lose, is that only 5 ticks? It seems like our stop is bigger than that. Trade activity. It's a 10 tick stop. Okay. I'm not quite sure what happened. I'm wondering if this arrow's not in exactly the right spot. And we actually got long earlier. Oh, I know what happened. I see. Okay, so we made a point. We made a 1.25 there. I was looking at it like it was a loss. That red arrow there kind of threw me. There's a green arrow there. It's buried. It's a little hard to see. So we make a 1.25 there as the market it advances off the entry here, and then pulls again. I think that this is not in exactly the right spot. Just the way that arrow is drawn, because we get 10 ticks and then we move the stop to entry plus 5. So it could be that we entered right there, and yeah, no, I guess it's okay. We went up to that bar and then pulled back down and got taken out. So we're really tightly trailing it. It's the right thing to do in this case because the market's going to thrash sideways. So we make a little bit right there. Staying out of trouble here with the POC. That's the green dashed line. And then another long right there on a pullback. You get 3 points there. And that makes up the 4.25. So 2 trades. That's pretty reasonable, actually, considering how volatile that market's been. Okay. What's the total been? Let's see, trade. Oh, I gotta set this up. I've been doing this for 2 weeks now, so that would be February 4th. So from there, sim NQH9, that's right. Period. What is it? Let me just get to that. Yeah, so it's not doing much. Is basically what it is. I'm just so conservative that I'm hardly ever taking any trades, or we're just not matching to the randomness. What's the? It's 9.4% is the risk factor, which is pretty low. All of these are actually low, and we may actually be too low, so we'll have to see there. But certainly caution is the watchword in the NASDAQ. So I'm going to watch this a little bit before I consider cranking this up, and then even further before I consider putting real money at stake. All right, so with gold, this week I changed this to a faster chart, and I kind of like what I'm seeing here in terms of, we're getting more trades, we're getting more looks at the basket. Hasn't really generated a lot of profit yet necessarily, but I like what I'm seeing in terms of the trade and the trade quality. In fact, we can take a look at that here. Trade activity log, and then just show me the GCJ9. So actually, I guess it's just the last 2 days, right? So we've had 3 trades in the last 2 days, up $80. So, forgive me. So we'll see. It's early days yet. But this brings up something about oil that I've been thinking about. So the oil risk factor is 11.8%, which is pretty low, actually. 20% is kind of the number we've been aiming at. When I set them all up to go all at once, I went more conservative rather than more aggressive. And when I look at oil, what I see is I'm wondering if I should be, I don't want to say more aggressive, but in the same way that we made a change to the oil market to get more looks at the basket, I'm thinking that I need to do something similar with CL. I'm almost thinking out loud here. And one of the key differences between now and say November or October when we started this was when we switched away from the indexes, is that we now have the analytical tools to clearly understand the impact of a change, whereas before we were struggling with having to use the Sierra Chart Replay program, which was just too slow given the complexity of the calculations that we're doing. Since then, I've written a program to do that. And so what I see in oil is it's kind of the same thing. I see a fair amount of movement here, but I don't quite see like I'm getting enough looks at the basket. And so there's a couple things there. The first is you could do the same thing that we did with gold, which is go to a faster chart. Now I'm disinclined to do that because my motivation for going to a faster chart in gold was that there wasn't as much movement, whereas in oil there is. Okay, so I don't think that's the answer. But having said that, I built a 5-tick chart and I extracted all the data, and I'll be doing the analysis here over the next few days or a week to see if it's a viable choice. So the couple key differences between now and 4 months ago is that we have an analytical process to evaluate the behaviors much more rigidly than we had before, and using that same set of programs, we can very clearly identify the impact of the change. So if just looking at today as an example, if I look right here, that looks to me like a spot where I'd like to be involved. All right. here, a lot of people get excited about this break higher. All right, and the problem here is that you don't have any real volume to help you understand what's happening here. Is the market going to keep going? Is it going to fall? Is it going to immediately fall apart? So the volume profile is not rounded out enough for you to understand. So I'm not too terribly upset about missing, that move. But this to me looks like I kind of would like to be involved there. The market comes, the market moves back to the POC and then it breaks lower and pulls back. So right there in particular. And so I'm curious. Let's go look at that on the 5-tick chart. And again, I'm sorry for coughing in your ear. I just want to get this done at this point. Let's look at the 5-tick chart at that same point in time. It was 7:16 actually. So that's here. Right here. Okay. And so you can see that, okay, well, by going to a faster chart, I'm in a spot where I just look at the orange bars. Don't just ignore the numbers. I'm actively looking for a trade. All right, so that's good. The bad news is I kind of seem to be looking almost too often here. So I don't know if that's the case or not, because we have to analyze these codes in that very rigorous way that we've defined to see if these just would get, if these, these are 293s and 228s, would these just get ignored because they tend to just not work out, or would we be going after them and taking losses as a result? Unclear. So that work needs to get done. I did do the work of creating this chart, creating the export chart, extracting all the data. It hasn't been processed yet, or pre-processed and then machine models built. But that's mostly automated at this point. The other change that's possible here, and this is this is going to make sense mostly to members, is that if you'll notice, there's a low volume node here, this red line. This means the low volume node is below price. What this is the nearest low volume node below price, and it's this funny red color. And then the nearest low volume node above price will be a different color. I forget which. It's this orange here. All right, and so that's what we're doing is we're tracking is where price is currently. Just tell me where is the nearest low volume node above and below me. I don't care about anything further away. I just want to know, am I near a low volume node above or below me? And you can see that here on this chart, there aren't any in this area of this circle. And the reason is that, we tune the sensitivity of the low volume node calculation based upon the height of the range bar. Okay. And it's typically, the value is double the range bar height. And when we were originally trading CL, we used a 10-tick range bar, and so we used a 20-tick value for that low volume node sensitivity. And when I switched to a 7-tick chart, because I just felt like I needed it, given the amount of movement in oil, it doesn't move quite like it used to, so we didn't need a 10-tick chart. I left that sensitivity alone. And so for members, if you go in and you look at the low volume node study, which is right there, this is a custom study that I wrote that tracks the low volume nodes by bar. Very difficult to do. And you look at the setting, you'll see that it says 20. And that's because originally it was 10, twice the 10-tick range bar. And so the other thing that we could do is change that to be in line with the normal doubling of the range bar height. Now, we didn't do it at the time, mostly because we didn't have the analytical tools at our disposal to understand what the impact of that change would be. But we have that now. And so it occurs to me that one of the things I should do is investigate that first before switching to a faster chart. I don't actually think I need a faster chart for oil. I think 7-tick range bar is fine. But I would like to get more looks at the basket, and I think that the answer might be here. So that would be changing this to 14. Okay. Now you can't just change that and off you go, because that changes the input data that would go to the machine learning system. So I have to make that change and then rebuild models and redo analysis, and there's the entire set of work that needs to be done to understand what codes to trade has to be done. But I'm just curious. I'm going to change it here and just see, would I have gotten a low volume node in that one particular spot? I'm just curious in this one instance. Would there have been one? And the answer is yes. So I kind of like that. That suggests to me that, I will, because what happens is you're getting a low volume node right there now. So that suggests to me that yes, I do want to do that. All right, so I need to put that back to what it was, because the models are built. The models are built based upon this sensitivity, and if you try to run it with a different sensitivity, you're no longer in sync with what the model is working with. So I'm going to do that. I'm going to build models with that sensitivity changed, and then do the analysis and test it, and see if we should change that. A very simple change to make for the user. A lot of work for me to assess the impact of that change, but that's kind of what I'm for. Okay, so there I go again. Sorry. So that is it for today. You can see we have a very defensive posture going here, and it may very well be that that's exactly the right thing to be doing. But at the same time, I don't want to rest on my laurels if I see something that looks like I should be pursuing. Okay, take care.